Okay, guys, you're welcome. You're welcome to this week analysis. All right. So we want to do something different in 2024. We want to give back to the community. Okay. So if you guys find this type of content um, interesting or you like it, let me know in the comment section. Okay. I mean, give us a reaction emoji, something. Okay. All right. So I'm sure a lot of you have seen patterns like this online. Okay. You've seen something like this before, or this. What if I tell you there's a way you can trade this kind of pattern and then you have higher win rates, just like we do. All right. So basically, this is what they say. It says the break of structure. This here. This is the stomp hunt, right? This is the break of structure, another break of structure, and this is liquidity. Yeah. I will show you how you can trade this kind of pattern and you have higher win rates than what you are presently. Okay. The same thing here to stop on here, right? Break of structure, another break of structure. So if you're not used to all these words, break of structure, liquidity, and all that, maybe you should get into our mentorship group. Or there, if you're a newbie, just go through the basic course already on YouTube, okay, on our YouTube channel. You see the basic course there where you can learn basic things about forex trading, okay? So yeah, it's free. So all right, so you see something like this online, you see people trade this kind of pattern. Today, I want to show you how we trade it and we have higher win rates. I mean, there's not how you can win all trades, but then it would be nicer if you win many of your trades than you lose, right? So let me show you how we trade this kind of pattern. Okay, that gives us more wins. Now, this is GDP USD on the H4 time frame. I want you to look at this closely. Pay attention to this. You would see this. Right? Look at this, guys. So what I just literally just drew here is the stop points. This is the break of structure, another break of structure, and here's the liquidity. You know what? Let me take this out. Let me draw this again. I want to do something differently. Pay attention, pay attention. Okay. Um, all right. Okay. So let me draw this out now. So what you can see here is basically what I drew down here before. Let me take you there. It's basically similar to what I drew here. Okay. And you can see this as the stop points, break of structure, another break of structure. So what is left is we're waiting for price to go up, take out this liquidity point, right? And then drop down, right? That is what is left right now on GDP USD, okay, for this new coming week, right? So that's what we are actually paying attention to. That is what we want to see. Now, what's that thing I said that give us higher win rate trading the kind of strategy? Um, Hold on, let me just draw out this. So it broke external structure, which I like. So I like to use the red line for the external structure. Okay, and this is the liquidity, which is the last high, structural liquidity, last high before the main high. Okay, now what's the first thing? There are actually two things or three things that I had to this strategy that makes it higher probability. The first one is the strong high, which is one that took out the stop ons, must mitigate something on the left side. and it's not an FVG. It has to be an order block, railroad track, or inside bar candlestick pattern. Okay, so right here is a railroad track. What do I mean by railroad track? I see this blue, this bullish, and this bearish candle. Basically, if you go to a rail station, a train station, the railroad track is like blocks lined the same, almost the same size or the same size aligned, right? They're aligned like this, like this, like this. They're like following each other, right? That is what we have here. That's also what we have here as well. Right, this bullish and bearish candle is a roll track pattern. This bullish and bearish candle almost the same size as the roll track pattern as well. So we have something like that here. All right, so I like this. So it's mitigating this roll track pattern. Let's just mark this. Mitigating this roll track pattern, which makes sense. If you're confused, then maybe just don't take this kind of setup. Maybe you're used to seeing other block or inside bar. This is an inside bar, okay? This kind of doji is an inside bar candlestick pattern. Okay, of course, you should know that block. This is another block. Okay, now, this is the first thing I look out for. Did they mitigate something on the left side? If you mitigate something on the left side, I like it. It's higher probability that it might hold. All right, it's like a higher chance that that price is going to hold. This high is going to hold. Now, the second thing is, sorry. So the second thing is when I drop my Fibonacci from strong high to weak low, I want to make sure that this liquidity, the structural liquidity, high before the main high, is above 71% Fibonacci. All right, it's above 0.71 Fibonacci. Okay, so set your Fibonacci above this to this number as well. But once it's above it, then I like there's a higher chance that this is going to hold. Okay, so I can then draw my position wherever. And then I do 5 pips above the strong high. Now, one other thing that I had that makes it high probability is I trade on the higher time frame. Okay, I'm not saying it does not work on the lower time frame. It does work on the lower time frame, but there are noises on the lower time frame, and you most likely have unnecessary losses on the lower time frame, except you're very good with H4 direction. All right, H4 is something, direction is something we talked about in the mentorship group. Um, but if you're good with direction on H4, if you're good with order flow, then you can trade lower time frame. But if you're not good with that, you're still struggling with understanding direction, then just go on the higher time frame and make life easy for you. Stop taking unnecessary losses. Okay. So one reason why we have higher win rates is because of we trade on the higher time frame, which is on the H4 and H1 time frame. Okay. These are the H4 and H1 time frame. All right, so let me delete this. Chat is becoming so noisy now. So this is what I'm looking at for on GDP USD this coming week. I'm looking at price to go up, take out this liquidity and drop down for a 1 to 5%, a 5%, 5 out, meaning if you reach 1%, make 5%. If you reach $100, make $500. You get it, yeah? So if you're interested in this kind of trade, you can take it with us, but then use proper risk management. I actually send this to the VIP Signal group. So yeah. So let's also look at GDP AUD. GDP AUD is one here also that I'm very much interested in. Okay. All right, GDP AUD. Let's look at this. Pay attention. So we have this. This is what I'm looking at to play out on GDP US and GDP AUD. Right? We have the stop points. We had okay, hold on. I didn't map out the liquidity, structural liquidity. So we had this. Sorry guys, something is calling for my attention here. That's why. So this and then to the website. Okay. All right, so this is what I'm looking at on GDP AUD. So this is the liquidity. Let me show this out for you so you can see. Right, this is a stop on breakout structure, another breakout structure as well, and liquidity. You can also see this broke external liquidity. Let me just delete this. You can also see that this broke external liquidity, which is the main eye. I like to use red line for that. Okay, you see, there's nothing again on the side. It broke external liquidity, so I like it once it does that. All right, and then yeah, remember I talked about. Okay, let me first draw the lines so that we can be on the same page. This is an internal liquidity, so I use black line for that. Okay, I think that's okay. So remember what I talked about? This is an inside bar candlestick pattern. Okay, mitigate something on the left side, like I said, is the strong low, and then you want to draw your fib from low to high. You can see that here, this structural liquidity is below 71 fib, right? Now, makes sense, right? So that is what I'm interested in looking at this. I'm not saying I every time I take this kind of trades, it's always ETP, right? I can take 10, and out of the 10, 7 of them will ETP, 2 will each SL, and 3 will each stop loss. But then you can see that it's a profitable strategy with that kind of number, right? Which is giving a 70% win rate. And one of the reasons why is because, the reasons why are because of these three things I mentioned, which is it's mitigating something to the left-hand side. Structural liquidity is at below 71 feet or above 71 feet, depending on the buy or sell setup. And I trade at time frame. Okay? I trade at time frame. So this is what we're looking at on GDP AUD for the coming week. Hopefully it plays out just like this. This is also sent to the VIP Signal group. So you can join the VIP Signal group. It's actually free to join. Okay, you don't need to pay any money to us to join the VIP Signal group. But then if you want to join our mentorship, then just join the Telegram group and chat with the admin. All right, so this is what I'm looking at for GDP AUD for the coming week once again. Other peers, I only trade GDP peers, so the rest of the peers, I'll leave that to mentorship students, break that down with them later on today. But so let me give this to the community first and let you have my view on the market. So do you agree with me on this analysis? If you don't, let me know. If you do, let me know. And if you enjoy this kind of content, please encourage me so that we can create more of this in the future. All right. Thank you very much. Have a great week, guys.